It's on live. Gary, can you hear me?
Yeah, I can. I've agreed to record it publicly very Okay.
Let's see.
My butler is not in your circle. You're about to join. We'll hang out on air. Okay? Let's join it.
Hey, Gary, I can see you there.
Yes, I can see you well.
Right. Okay. Fantastic. So, Gary, we're going to be doing this webinar now for law firms who are thinking about buying professional indemnity insurance, who want to know about professional indemnity insurance, who have problems with their professional indemnity insurance. Now, I come across lots and lots of law firms, and many of them have told me that professional indemnity insurance is a big, big issue for them because it's a big overhead. Now, you've written this great report, which I think is excellent. I'm going to be sending to all my law firms because it highlights the four main issues about PII. And those four main issues are what we're going to be talking about in this webinar. Now, let's just remind everybody of your report and the four main issues, and we'll go through them and get your insights of many years' experience of dealing with this market. So the first issue is expense. The second issue is sort of insurer security. The third issue is this hostage feeling some law firms get, and the fourth issue is process. So there are these four main issues. So let's just cover the first one, Gary. We talk about expense and it being a big overhead. This is no mystery it's an expense, but why is it so expensive? What are the reasons?
I think, Boyd, there are many reasons for the level of expense. The first one is that, unfortunately, there are a lot of claims against law firms. Regretfully, a lot of the insurers keep this information a closely guarded secret because of its commercial sensitivity. So it's sometimes hard to find out exactly how much they are paying out. But one major insurer that I spoke to 12 months ago told me at the time that for every pound collected in premium, they were paying out 1.30. This year, when I saw them not so long ago, they updated that and said that for every pound they collect in premium, they're now paying out £2. So it does vary. Some insurers have got well-performing portfolios of business, but you know, that's the risk selection game. Other reasons for the level of cost, the breadth of cover that the insurers have to give, which is the broadest form of protection available to any professional, and one of the issues that insurers have difficulties with is that it sometimes forces them to pay substantial claims without actually being able to collect the premium. Coupled to which there are a limited range of insurers, and obviously the longer an insurer stays in the game, the more claims they build up, and those claims come at a price and have to be serviced, which keeps driving premiums upwards. One overlooked and underestimated feature, though, in my view, is the broker cost, because brokers, particularly some of the larger national operators, can be extracting 25% or in some cases more than that of the premium, and if most of the premium isn't finding its way through to the insurer, then that isn't helpful when claims arise and the insurers have to react.
That's right, but there's also another thing which I think you reminded me of some time ago, which was this legacy risks as well. They've taken a certain amount of money in, but if they stop providing the insurance, they've still got these legacy risks. So sometimes it's very difficult for them to manage that process, and that causes that the premiums go up as well, isn't it?
It does, yes, and it makes it very difficult for some of the bigger incumbents to consider withdrawal, for example, because as soon as they were to exit and turn off the premium tap, then claims that they have outstanding still have to be met and serviced. And typically, that runoff, as we call it, could last 8, 9, 10, 11 years after the decision to exit the market. So it is a very, very difficult balance to strike.
Well, in your report, you've got some good news really for law firms as well, because you explain how potentially PII can actually be reduced as an expense. So can you just explain some of the things that you do to get law firms reductions in their expensive PII?
Yeah, I think the key thing, Boyd, is there are so many firms renewing at the same time of year or during a similar period. It becomes difficult to get the attention of the appropriate level of underwriter often, because they are so busy, and it's quite scary sometimes how little time some risks are actually reviewed. The key thing, we believe, is in being able to persuade the right level of underwriter to spend sufficient time to take a proper look at a case. It's about getting the right picture of the risk, which can only come really from a broker getting closer to a firm, understanding it better, and then finding the right underwriter with the right appetite that matches the risk features of the firm. And adopting that approach, we've been pretty successful, we like to think, in making some quite spectacular premium savings.
You say spectacular, but I think you managed to find, by researching the market for one particular law firm, sort of presenting the firm in exactly the right light and matching the firm to the insurer appetite. I think I remember you saying you saved one law firm, I think it was £100,000 premium they were paying, and you got that down to £5,000. So real, £95,000 money that their accountant could count and say, that's now yours.
Absolutely, absolutely, and that was by getting to know the risk, understanding that the issues that were perceived by the previous insurers weren't really issues at all, and then finding the right insurer. So they were delighted, needless to say, and they're still clients at the moment. So,
that's great. I mean, one of the things you can also do sometimes is, and this is something that maybe law firms don't think about, is that even by staying with the same insurer, because of your skills in presenting and your understanding of the law firms itself, you can actually get reduced premium by people staying with the same insurer.
We can indeed, yes. I mentioned the broker cost earlier, and that is certainly something that we can sometimes use to good effect to reduce the cost. But it is about getting the right insurer at the right time and using our experience and knowledge to persuade them to give us the right result.
That's right. And one of the things also that we have talked about in the past, you and I, is this excesses, recovering excesses beyond the aggregate limits. Again, this is another area where you've been very successful at monitoring and safeguarding firms by really being good partners with them. And just tell me a little bit, how much did you save for this one firm? I think it was it 50, 60, £65,000, I think.
£65,000 in one case, and just over £30,000 in another case, and there have been other examples as well. One of the issues that law firms encounter often is that the policies they typically buy come with an each claim excess, rather like motor insurance, but very often some insurers will agree to aggregate that each claim excess. In other words, during the year they may bear 3 claims and the 4th claim would be excess free. One of the difficulties is that the volume of claims sometimes, and the volume of business that some of the larger broker and insurer operators have, they sometimes overlook small things like keeping track of the number of each claim excesses paid during the year, and firms will merrily continue on paying those excesses. It's only when we take them on as clients and review their past history that we can uncover overpayments like this, and as I've mentioned, we've had several successful recoveries there, which again firms have been delighted at, because initially they had no idea that they'd actually paid more than they should have done.
Again, that's real money that the accountant can count and say this is now yours, rather than sending it out to the insurance company. So it's a good news story all around on that.
Straight through to the bottom line.
And if firms, we just touch on this very briefly, but if firms want a finance option for their premium, can you do a financing option?
Yeah, there are some insurers that provide stage payments anyway. They typically come at a price, although they're not out of sync with other insurance instalment facilities. But we also have some external lines of finance as well, from a variety of sources. So affordability and the cash flow impact of paying a large premium makes premium finance and instalment arrangements as important often as locating the right insurer and negotiating the right package.
Now, people will also be thinking about, as well as the premiums, they'll also be thinking about guaranteeing, that insurer is actually going to be there when they are needed. There have been some cases where unrated insurers have actually failed. So what are your thoughts on, rated insurers and unrated insurers? What are your thoughts on that?
Well, speaking to most law firms, it seems to me, and I agree with this, that their preference ideally would be to be insured with a large, sound insurer with a good credit rating. In recent years, though, it has been a feature of the market that a number of insurance companies without credit rating have crept in. Credit rating itself is no guarantee that an insurer will be around in years to come, but the recent experience of anyone insured with Quinn, Lemma, Balva, or more latterly Eric, the Icelandic insurer, underlines how risky this can be. The difficulty with professional indemnity is we refer to it sometimes as a long tail policy. What that means is if you tell your insurer about a claim today and it takes 5 years to settle, the insurer needs to be around and financially healthy in 5 years' time. It doesn't matter how good they look today or how large their financial backing. Credit ratings are an indicator, a guide, nothing more. But certainly we are detecting this year a little bit more appetite in certain sectors from insurers with good credit ratings. There is a bit more interest being shown, and the review of PII, which the SRA has put to one side for the moment, but apparently is going to continue on into next year. I think depending on the outcome, that could well tempt other insurers with good sound credit ratings into the market, but we'll have to see on that one.
Yeah, I mean, I think that the market for insurers has been quite limited. So one of the reasons for using an independent broker, I think, is to get firstly present the right case of your firm, but also make sure you get objective advice on that best insurer. Now, if some law firm is going out there and using multiple brokers, I think that's probably going to harm their chances, isn't it, of securing the best insurance, because the underwriters don't want to see 4 or 5 applications coming from various different brokers for that firm. What are your thoughts on that?
It's a very valid point, Boyd. They quickly lose interest, and bearing in mind that some of these insurers, depending on their position in the market, will see hundreds or even thousands of these applications. The number of underwriters is surprisingly small in actual fact, and it's an awful lot of work to get through. Despite the slight move of some firms away from 1st October, the bulk of firms are still due at that point in time. So over a 2-month period, 10,000 or so applications have to be reviewed. If you're a Travellers or a Zurich, you may well see a huge percentage of that number. But it's choosing a broker is a tricky situation really for solicitors, because if they respond to the big marketing campaigns from the nationals, the likes of Aon, Willis, Lockton, Marsh, what you tend to find there is that they deal with a particular tide market, and what that means in effect is that they will tend to go to that insurer and nowhere else for quotations. What we do as independent brokers is we will approach a cross-section of the market, and we have very good access. In fact, we can approach insurers with a majority of options in mind. Sorry, Boyd.
It's all right. We always have interruptions.
Yeah, sorry, there was an interruption at this end, unfortunately.
That's no problem. Hey, Gary, we just carry on. There's no problem about this. Webinars are like this. We don't worry about things like this in life.
Yeah. Sorry, someone just popped into the office. That was all.
The phone can go. They're probably going to try and get an insurance policy from. We just carry on here. Don't worry about it. Listen, we were talking there about multiple brokers, and it's probably not a good idea to have these on. And the whole renewal process sometimes can be like pulling our teeth, you know, from solicitors and law firms talk about that. It can be a difficult renewal process. But just talking about the independent broker, I think that, you know, one of the biggest things is that sales staff at independent brokers, many of them are paid on commission, and they sort of put this pressure, this you know, hostage pressure on the law firm to say, right, you've got to get this done, you've got to get this done now. But, you know, aligning your staff with the client's need, I think that's one of the great things with you, is that Ntegrity, you don't pay your staff on commission basis, do you?
No, no, that's true, and it is an issue for some, certainly. If a broker only has a single insurer option, then, you know, don't be surprised if they try to come hell or high water, find a way to shoehorn firms in, and there are some very incentivized brokers out there that will apply unreasonably short acceptance deadlines. You know, our role is, as the independent broker, to sit on the client side of the fence and to make sure that we do what's right for the client. We have no distractions or biases in our choice, either in terms of commission or other performance incentives to place large amounts of business with any particular insurer. What we want is the right deal for our clients, and in that way we've placed professional indemnity insurances with over 30 different insurers. We give a very good coverage of the majority of the market, the only exceptions being one or two tied exclusive facilities that can only be accessed through dedicated brokers. But we like to think that if firms want to get a pretty good overview of what's available in the market, we provide a very, very broad spread to give them that understanding and help them make an informed decision.
And one of the things, I suppose the only time when there could be some time pressure is when certain insurers reach their sort of maximum level in the market. They allocate a certain amount of funds, a certain amount of insurance cover, and they get near that, then they may withdraw from the market. I suppose that's fair to say that that's probably the only time when there's pressure on.
Real pressure, yes, but it's true to say that any firm that leaves it too late could run into insurers filling their quotas, closing down early. I've known in past years insurers close 2 weeks before the deadline because they have enough solicitors' business. It needs to be balanced in alongside other professions that they insure as well. So I wouldn't leave it too late, certainly. But
plan a bit ahead.
Yeah, absolutely, absolutely. Get started now. Time was, Boyd, prior to last year, when law firms could choose to move away from the 1st October renewal date. What we tended to find was insurers would open up sometime in July, sometimes earlier, sometimes later, and work on it in a focused way for a couple of months, and then effectively deal with the admin, close down, and wouldn't want to see any applications, for example, from new start firms until the following April or May. With the option of choice of renewal date, insurers have become a little bit more flexible, but it's still a very concentrated campaign. And that does sometimes mean that firms don't always get the attention to their risk and the respect, in some ways, of an underwriter taking time to understand what they're all about. That message does come down to the broker that you use and their ability to get the time of the right underwriter, but also take the underwriter through all features of the risk, the better, the less attractive, and to explain why this underwriter should offer good competitive terms for the risk in question.
And I think ultimately it's about, you know, having the right insurance in place and claim handling as well, because having insurance is there for a reason. It's if a claim actually occurs. So one of the unusual things about you is the fact that you've got your own in-house claim support, and that sort of works to protect your clients, and you've got experience of dealing with claims against law firms, haven't you?
We have. It's invaluable having our own in-house resource, Boyd, very definitely. I think one of the features of the solicitors' professional indemnity market is that so many of the brokers, again, I'm probably referring mainly to the large volume operators, but they tend to approach this along the lines that they put a lot of effort into selling you a policy, but when it comes to helping you through the process and the pain sometimes of the claim, they point you in the direction of the insurance company and an 0800 number. Or
that's like taking you to the bottom of the cliff and saying, right, climb this, and there's the rope. That's it.
Yes,
off you go.
Without training. Again, our approach, because of our focus on being independent, my colleagues who work on our claims area, their job is to get the right result for our clients, and that can mean many things. But ultimately, our experience over the years is filled with examples where if there was no broker, if there was no representation of the policyholder firm, the insurance company would have rejected claims. They have limited ability to do that with law firms, it's true, but there are nevertheless points that they can take, and they are scrutinising claims now more closely than ever because profitability has been hard to find among insurers. They are looking very, very closely at all claims now, and at the merest sight or hint of any issues, they will explore those avenues. So they are looking at things like policy disputes and recoveries against the principals of firms if everything isn't as it should be. And our job is to make sure that our policyholders, our clients, are protected from the worst excesses of that.
That's right. So independence is actually what sort of guarantees them the best chance of protecting themselves. But one of the things you also do is you can actually take over management of any existing claims as well. So your experience, even if someone hasn't been your client, your experience can still be brought to bear on existing claims with your system, and that's a great thing to remember. As well, to any law firms out there who are struggling with a claim, get in touch with Ntegrity. Now, if firms are thinking of merging and or closing down runoff cover, I think the cost of 6-year runoff cover does vary dramatically. Can you help law firms with the runoff cover?
We can. It's something we've done a lot of, in actual fact, and you're absolutely right. It's another key factor that should be taken into account when buying the policy in the first place, because the cost of the automatic 6-year cover that all insurers have to provide varies enormously, from 200% at the bottom end up to 600% of the annual premium paid. 600% makes it extremely difficult to afford for many law firms, of course. But these are areas that really need to be looked at carefully when a firm is buying its policy rather than down the track. So if merger is contemplated, this needs to be looked into at renewal time, and it's a key area. There are options available. There are ways that mergers and acquisitions can be addressed now without it having to be unreasonably and prohibitively expensive.
Well, I saw your recent article in the Solicitors Journal, which they asked you to write about this whole area of professional indemnity insurance. And if anyone hasn't seen that, it's well worth them grabbing hold of the Solicitors Journal, the issue that was in. Now, I think we can really sum up this short webinar really by saying, you've got a great report which is available to law firms, and they should certainly access this report, and it's a summary of this webinar to a certain extent, and get in touch with you. Find out what else you can help them with, because you've got lots and lots of experience there. But in a summary, I think probably it's not necessarily about the expense of insurance, because ultimately having the wrong cover is probably the most expensive mistake anyone can make. Is it fair to sort of summarize by that?
Yes, it would be. We've experienced over the years of more than a handful of firms that have found to their cost that policy limitations, insurer failures, their claims record has literally put those businesses out of action, and in some cases been even more personally disastrous for the principals. So it's well worth spending some time on getting this policy right, because ultimately it's protecting the principal's personal financial wealth, and that has some much wider impact than just the firm.
Gary, it's been great talking to you. Gary Horswell, Ntegrity, Professional Insurance for Law Firms. It's been great doing this webinar. We've just touched the surface, but even just touching the surface, I think we've given a lot of law firms and solicitors some things to think about. And I hope you've given them the confidence just to do one thing really, and that's pick up the phone and just have a quick chat with you and your firm, because there's lots and lots you can help with as an independent insurance broker, representing your clients, representing the law firms in the right way, presenting them in the right way to reduce their expense, making sure they get hold of the right insurance, and protecting them from any of these excess covers. And maybe, just maybe, there's someone else out there who you can reduce their premium down from £100,000 to £5,000 as you have done before. If this webinar helps someone save £95,000, then it's definitely a webinar worth doing. Gary, it's been great talking to you, and I'm sure we'll speak again in the future about this subject.
A pleasure, Boyd. Thanks.